everyone, it's Karen Totino with Monticello Real Estate in downsized Saratoga, and I'm here with Anna Smith of Movement Mortgage.
Hello, guys. Great to see you today.
Yeah, and we are making a video because we're hearing some little whispers of buyers that are thinking about waiting until interest rates come down. You know, whether that's this spring or possibly even next year. And it's easy for me to talk to buyers and say, trust me, it's better to buy now with higher interest rates. And they may think, if they don't know me yet, they may think, oh, well, maybe she's just trying to be pushy and she just really wants to close a deal. And unfortunately, sometimes real estate agents do get that reputation of being a bit transactional. But I thought it would be worthwhile to bring Anna on and break down the numbers and see side by side what it looks like waiting 6 months, a year, and what the cost is of what we call date the rate and marry the house. So there is some cost to having the higher interest rate and to refinancing, but that balances out with appreciation and possibly not paying a higher price for the house because of competition. So Anna, do you want to
I love
show
it.
us the numbers?
Let's take a look-see. And anybody that knows Karen knows that Karen would not be pushy and hardcore salesperson, that she's always looking out for her client. But I love data. I'm a numbers lady. So let's look at the data and see what that shows. What I have up on the screen here is some data that I pulled from my system for a purchase price of a $400,000 house in Saratoga County, New York, which is where Karen and I both reside and work primarily. And how I have it broken out is a conventional loan today at 5% down. That would have you at $380,000 purchase price for 30 years. And depending on give or take, you'd be around somewhere in the mid sixes, depending on the type of loan, your credit score, all that jazz. This would have you at a principal and interest of about 2401. Okay. If we move along down here and we go over to waiting a year, you can see you would be missing out on, this is historical appreciation, guys. This is your average historical appreciation for the area. So if you wait a year, you're going to lose out on 18 grand there, if you see there. Okay. That makes your down payment go up. However, you will have a slightly lower interest rate. So that will make your principal and interest a little bit lower. Okay. If we look at just the loan today and waiting 1 year, and we don't even break out any of the other scenarios on here, let's look at what that costs. So if you're dating the rate, as you can see here, you're going to save per month $146. Do you guys see where I'm getting that from? It's 2,400 minus 2,200, $146. So over the year, it's going to cost you $1,752 more to buy the house today. Following me? And then, so that payment difference over 12 months is going to have you at that $1,752. And then if we add in that cost to refinance a year from now, if the lender services your loan, you can potentially get a lower cost refi, assuming you qualify. We'll call it 4 grand, okay, for lender costs, appraisal costs, attorney fees, etc. It may be less, it may be slightly more, depending on if your lender services the loan or not. So it's costing you, if you bought today instead of a year from now, about $57.52 more. Make sense? But your benefits, if you're marrying the home you buy today, as opposed to waiting a year, you're going to get that $18,000 of appreciation. Remember when I showed you the historical appreciation over here? That 18 grand right here. So that is going to be one of your benefits. Plus, you're going to pay off like $4,200 of the loan. That's the amortization. So you have benefited not only by being in your own home, but you benefited by $22,000, which, we can all do the math that a benefit of 22 grand is better than a negative of 5,000, right? This is not including, we're talking historical. Karen, would you say right now as a buyer, it's more or less competitive as a buyer right now than when rates were 4%?
Well, it's less competitive, but I mean, it's still competitive, but it's going to be even more insane and more intense once the rate, if when the rates go down. So here we
Exactly.
are more in
Yeah.
numbers.
So like numbers again, like I feel like a lot of people are watching TikTok and they see real estate agents and mortgage people and it's like, oh, the videos where it's like all the buyers running to the market when rates drop. So let's go with stats from people at the National Association of Realtors. Every 1% interest rates drop, 5 million more buyers either qualify or will enter the market. So your competition right now is as low as it's going to be where rates are at this moment as opposed to waiting. So again, on that front, Karen, which you can speak to, these are historical appreciation numbers, but when you add in the competition, those could be much greater. Am I right?
Yes, I mean, two things. We're doing these numbers very conservatively, just to be on the safe side. And we don't have a crystal ball, so we don't know exactly what's going to happen. But based on past history, one, we know over the past 3 to 4 years, appreciation has been much higher than historical appreciation, like insanely high. Is it going to continue to go at that pace? Maybe not, but I think we're safe in saying that it's going to go at a historical pace.
Um,
Um,
5 million buyers like that are
so
waiting on the
yes,
sidelines.
and the appreciation is probably going to be higher because with more competition that drives up the asking price. So someone puts their house on the market, and if there are 5 buyers, or there's 10 buyers,
Mhm.
or there's that buyer that has lost a bid, 12 times, and they're going at it, they just finally just want to get a house and they just go for it.
Mhm.
That's going to drive up the prices of houses even more. So that's going to drive up the appreciation even more. So we are being conservative. One, that house that cost 400,000, we're being conservative that it's going to cost 418,000. It could be, quite a bit higher than that, and most likely will be.
Right. Based on stats, I suppose to play devil's advocate, is there a chance that prices drop? I suppose, but you have to also consider this area as well. I think it's on the NAR website as well. They're creating something like 7 jobs here for every one housing permit. That's the permits that builders have to get to build a house. So you're talking a pretty massive housing shortage. So again, these in my opinion as well are extremely conservative numbers, extremely conservative. We are, in my opinion, I don't know about yours, Karen, in like a nice little hole in the market. What's a divot in the market right now where there's a lot of buyers that are on the sidelines due to rates. And so you have just this unique window of opportunity to jump in, grab a house, not care so much about the interest rate, refinance, make sure your lender services the loan so you can refinance or recast and secure your home before these 5 million plus buyers enter the market.
Right.
What's
And I
next?
think sometimes people also think that, we've been in the seller's market, and the real estate market does, kind of shift around, from a seller's market to a buyer's market. The problem is that we're in a seller's market because of a shortage. And a shortage takes quite a bit of time to correct. It doesn't just happen even within a year or two. It take a long time to remedy that shortage. If you are waiting for prices to come down or more balanced market,
Be
you're going to be
waiting.
waiting even longer than a year.
Yeah.
And by then the appreciation's gone up even, you've got compounding appreciation year after year. So, it's just like what you hope happens
Right. And
to
then,
your retirement is going to happen to that house. So you miss out on all that compounding appreciation, and you're just paying that much more for what? A slight decrease in interest rates, or even if it's significant. I think people think that maybe the rates will go back down to that 2 sub 3 rate. Highly
not
unlikely.
not likely in our lifetime. Historical averages of rates are in the 7 to 8% range. And when Karen's saying compounding appreciation, it's just the same as compounding interest, right? On
Yeah.
your $400,000 house, that 4%. starts at 400,000, but every year it's 4% of the new value of the house, right?
Right.
So
Right.
really important to take that into consideration as well. And Karen, too, like a lot of your clients that you work with, you know, if you are watching this and you're considering downsizing,
Downsizers have like a really unique, they're in the driver's seat all the way. I
yes.
mean, they really are because they're going to get top dollar for their house.
Mhm.
And then they're going to be in a great position as a buyer because they're going to have a huge amount of cash, maybe enough cash to buy what they're buying next totally in cash if they want to.
Scream it from the mountaintops, I would, that I believe that every home in Saratoga County, assuming it's cared for and not flooded or, inhabited by animals, every
Yeah.
single house is going to cost more next year. And it's going to cost
Mhm.
more the year after that. And it's going to cost more the year after that, forever until housing catches up. And that could be 20 years.
Start earning money on your house and start accruing that appreciation because it's like when you plant a tree, they say when's the best time to plant a tree 30 years ago, but or today, so don't wait.
I think that you'll have some devil's advocate people that are like, oh, well, the mortgage loan, it has interest. It has interest. Sure, it does. But, would you rather pay $700, starting at your loan, $700 a month in interest or $2,000 a month in rent?
Well, and I think we didn't really talk about rent. Rent is historically high too. So the cost of renting, you're not saving money. And, there's always that argument. And I know that I've seen statistics where they're saying, oh, it is cheaper to rent. And if you took that money and you put it in the stock market, you'd make more money than the amount of appreciation and equity that you would have in your house. Well, show me one person
One.
that puts that difference in the stock market and doesn't spend it.
There's one person and they wrote a
Show me
book
one.
there and they wrote a book about it and they believe that rent. And I do think that like, each person's financial path is different. I hope this is really helpful for buyers that are watching this. And if you are, looking for a real estate agent or mortgage loan officer that are going to give you real information, Karen's happy to provide MLS statistics. I'm happy to run numbers with you and
Yes.
really make a strategy so that way you can take advantage of this unique time.
Yeah, I think seeing stuff on paper is so helpful. Seeing those numbers. Some people are numbers people, some people aren't, but I think, we've presented it in a way understandable and makes sense. So thank you.